Good evening and welcome to another edition of our weekend business program, Capital Market. The first one for December, live on Channels Television. I'm Ladi Williams. It's great to have you join us as usual. Let's start off with global stock market performances for Friday. We see major equity markets around the world ended the week with slightly mixed sentiments as investors reacted to the latest employment report from the world's biggest economy. In the United States, the Dow Jones Industrial Average rose 0.10%, while the S&P 500 was unchanged, but ended above the 4,000 index points level, while the Nasdaq Composite fell by 0.18%. In Europe, the UK's FTSE 100 retracted 0.03%, while Germany's DAX index gained 0.25%, while France's CAC index went down about 0.17%. And across Asia Pacific, markets in the region mostly look as investors look for clarity after China signaled a slight easing of its stringent COVID restrictions. The Nikkei 225 dipped by 1.59%, while China's Shanghai Composite Index fell by 0.29%, while Hong Kong's Hang Seng Index lost 0.33%. And back home at the unlisted securities market, activities ended the week negative as the NASD OTC Exchange and Security Index recorded a 0.15% decline. At the same time, the market capitalization fell further by 1.41 billion naira to close the week at 933.71 billion naira due to sell pressure by investors. On the other hand, total volume of securities traded on the exchange increased by 123.56% week on week to 3.19 million units. But total value of securities traded during the week decreased by 2.41% to 36.58 million naira in value. Meanwhile, Afriland Property was the lone gainer for the week with 10% advance in its unit price, while UBN Property, which topped two other losers, was also the most traded security on the NASD OTC market this week. And for the local stock market, now sentiment ended the week on a positive note as the NGX All-Share Index closed the week with a 1.26% gain despite pressure from profit-taking activities during the week. The gain is largely attributed to bargain buying in high-value equities, particularly from Airtel Africa, MTN Nigeria, with support from some big banks such as GTCO, which helped to counter sell-offs from other bellwether stocks. Stocks performance across the five key sectors of the NGX was mixed, with the banking, insurance, as well as the oil and gas counter in the green, while the consumer goods and industrial goods counter of the NGX closed in the red. Thomas White led a pack of 36 other gainers, up with more than 22% gain on its share price, while Beta Glass led 24 other losers, down by 9.9%, while 95 equities remained unchanged in prices. Meanwhile, the shares of Regency Alliance, FBN Holdings, and FCMB Group were the most significant contributors to more than 839 million shares traded within the week. And joining us now from our Abuja studio is Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and the President of Capital Market Academics of Nigeria. Join us right there. Great to have you on the program.
Very good evening to you.
Very good evening to you as well. So, Professor, we've seen another positive performance on the NGX there, back to back. The previous one about 6%, big moves. How are you seeing it?
Big moves. How are you seeing it? How are you seeing it? Yeah, Ladi, it's actually something that I have been struggling to lay my hands on any theoretical foundation, any theoretical basis. I've been asking a couple of my colleagues, broker friends, on what could be responsible for this, bullish trend we have seen since the month of November. One view is that the market actually bottomed out in October, and investors, traders, of course, doing bargain hunting, and they're picking, stocks with fundamentals. So that's one reason. The other one also has to do with the fact that we are approaching the end of the year, and you should expect some portfolio rebalancing, taking place. Some are doing that in anticipation of favorable earnings announcements by, many of these listed companies. But by and large, what I still find puzzling is where that liquidity is actually coming from against the backdrop of the increasing interest rate environment. Ladi, you recall in 2020, even during amidst the COVID challenge, the market, the Nigerian stock market, was adjudged the best in terms of performance, and all that happened towards the end of the year, and that's on the back of low interest rate environment. That was the market consensus. That low interest rate environment, brought about that. But here we are, in 2022, interest rates are rising. The central bank is tightening monetary policy, and yet we are seeing this kind of performance. So for me, it's something that requires some research, some investigation into factors actually propelling this. But again, I don't want to speculate, but one thing that keeps coming to my mind has to do with this currency redesign by the Central Bank of Nigeria, whether it's having any positive rub-off impact on stock markets. I was looking at studies done in India on the impact of the demonetization exercise that took place in India in 2016 on the impact on the stock market. The studies that I saw, had, produced mixed results. While some said it had significant impact, the others, some others also said it, it didn't, have any significant negative impact on the stock market. Others thought it had actually, positive impact. That's what they found. So results are mixed by and large, and the jury is still out with respect to the exact impact it actually had. So in our own case, I think it's something that we'll also take up. At the moment, some of my mentees and PhD students are already on it. By January, they should be, be out with their findings on the impact of the currency redesign on, stock market performance in Nigeria.
Right. We'll be watching out for that report. But could it just, looking at this positive trend we're seeing, right now, could it just be a bear market rally at this point?
You mean bear market?
Yeah, like a bear market rally.
Are you mixing it up? Did you say? Oh, okay. Well, when we say, bear market, bear market rally, well, the market is looking up. If the market is looking up, you wouldn't describe that as a bear market, really, in the true sense of the word. Yes, we are witnessing some momentum in the market now, but it's be too early to conclude whether there is any, what people have been calling Santa Claus, effect in this month. Well, as a concept, again, we don't talk about Santa Claus effect until the last week in December. Santa Claus rally or Santa Claus effect is a term that's associated with upward momentum in stock prices during the last week in December and in the first 2 trading days in January. That is what we know from a theory. Because over time, what studies have shown is that the last week in December, for many emerging markets and including developed markets, usually witness upward momentum in stock prices. And some reasons have been advanced for that usually investors, or people tend to invest their Christmas bonuses, general optimism around the festive season, also fund managers rebalancing for, to get, gain tax advantage or even window dressing, their portfolio. And another reason too why we expect some momentum in December, usually last week and the first 2 trading days, also has to do with what is called the January effect. Investors taking positions in stocks in December with a view to taking advantage of what is known as the January effect. That's the month in many markets where returns are usually the highest. So, well, for us in Nigeria, I think it's too early to say whether we are going to witness a Santa Claus rally. As I said, it's usually what happens towards the last week in December.
Okay.
For now, it's still these reasons I gave you, whether some liquidity is flowing into the market as a result of the currency redesign, or again, people are taking positions to take advantage of favorable earnings announcements by quoted companies.
Okay, Prof. What do you think are the likely factors that will influence market performance in the month of December?
Yes, I just alluded to some of them. I have said December is usually the end of the year, and you should expect fund managers to tweak their portfolio. Of course, present favorable performance. So that's one. The other thing too is that it's also possible that investors or traders will be taking advantage of the fact that a number of stocks today, if you look at their intrinsic values, you could say they present a buy position. So if you have markets tanking today, for example, somebody would say it's at variance with the market fundamentals. So a number of stocks have good fundamentals, and savvy traders, savvy investors are taking advantage of that, to take positions in them. Remember too that this is one market that is concentrated. You have just very few stocks, determining direction of the market. Just mention them. In recent times, we saw, movements in share prices of Airtel, for example. At some point, it was over 2,000 naira, but people say it's corrected now. It's now about 1,488 naira. Okay. You also saw that of including Nestle. Nestle today is down by just below 1,000 naira. The other day it was Nigerian breweries that that was the highest emerged the highest gainer. Today is around 45 naira. So you find these corrections taking place. The point I'm making is that it is just few high cap stocks that are determining direction in the market. Another concentration risk we'll find is that, remember too, even in terms of the operators, the stock broking firms, you have 10 big firms that also determine the direction of the market. Remember, they are also broker dealers, meaning they can also trade on their own accounts, apart from trading on behalf of clients. So if you take this concentration factor into cognizance, okay, that gives you an idea of also what is playing out. That is just because our market has this concentration. So any small change in those stocks or in the decisions or behavior of these big firms, push the direction of the market in a particular pattern.
All right, Professor. We'll drill down after the break on the revised capital market master plan and the roadmap, the expected roadmap. Do stay with us. Thank you so much. Keep stay with us there, Professor Uche Waleke there, Professor of Capital Market. You're still watching Capital Market right here on Channels Television. We'll continue the conversation right after this break. Do stay with us. Welcome back to watching Capital Market Live on Channels Television. I still have with me Professor Uche Waleke, Professor of Capital Market, Nigerian State University, right there in Abuja studio. Thank you so much for staying on, Professor.
Thank you, Ladi. My pleasure.
All right, let's take the conversation forward now. So in respect of the 10-year Nigeria Capital Market Master Plan, only about 30% of the over 100 initiatives were to be achieved, said to be achieved after nearly 6 years. What factors will you say were responsible for the low performance?
Yeah, the Capital Market Master Plan that was launched in November 2014, 10-year Capital Master Plan 2015 to 2022, had 111 initiatives, out of which a little above 30 of them were said to be to be achieved, so far. And the factors responsible for that were articulated in the, the revised document. It talked about the macro challenges. Of course, you know that the economy went into recession in 2016, shortly after that document was launched. 5 consecutive quarters of negative growth in GDP. It was a relatively long one. And again in 2020, there was COVID, and the economy also contracted and was in a recession. So the GDP growth rate since the launch of this document has not been inspiring. And of course, you can't extricate capital market performance. You can't divorce it from the macroeconomy. So that's impacted negatively on the performance of the plan. Again, you also realize that that plan, in my view, and of course that has also been generally acknowledged, was not really integrated into the country's economic recovery and growth plan. We had a medium-term plan that terminated in 2020, and if you pick up that document, ERGP, you won't see anywhere that the capital market, got some mention or got some attention. Okay, so that tells you clearly that it was not mainstreamed. It wasn't really part of that, ERGP. So the fact that the market didn't get a lot of buy-in from the, key stakeholders, or didn't enjoy support, at that highest level, of course, also impacted the performance of the plan. There were also other issues that border on methodology and, again, absence of metrics, to follow through the plan. But essentially, by and large, it had to do with the macroeconomy, the challenges we had. Again, you can also tie it to the enabling infrastructure. The enabling infrastructure, has continued to remain weak. Stock of infrastructure to GDP today in Nigeria is about 35%. Compare that to South Africa's 85%, you find that we are still very, far behind. So weak infrastructure, weak macroeconomy, have all combined to impede or hinder the progress of the capital market master plan.
All right, Professor, what do you think will be the likely challenges, and risk in implementing, the revised capital market master plan?
Yes, the challenges will also touch on this legacy, if you like, the legacy factors that I mentioned. But again, remember, they will also come from both external and domestic. If you take a look at the exogenous shocks where the plan is likely to face, that includes the fact that nobody knows for how long the Russian-Ukraine war is going to last, and the negative impact it's having on global economy. Today we know the situation in developed markets, the fact that they're struggling with inflation, and as a result, they're also, the central banks are responding with hike in rates, even though we know now that in the case of the US, it's likely to slow down. But it's still a case of monetary tightening. And when you have monetary tightening in developed markets, what happens is in emerging markets, including Nigeria, you're likely to have capital flow reversals. And when you have capital flow reversals, of course, that hurts your capital market because you have capital flowing out. Another way it also affects us is the fact that investors that ought to have invested, in Nigeria, or would have ordinarily invested in Nigeria, wouldn't be doing so, again, because of the challenges they are facing in their own, in countries or economies. So as long as we continue to have these headwinds, global headwinds, you should also expect that Nigeria will be affected, and of course that will affect the implementation of the plan. because part of what the plan is talking about is to attract foreign investments, and foreign investments will not come if the global economy is experiencing some challenges. Look at China, for example. We also know that China's economic growth rate is slowing, but especially due to its zero tolerance level on COVID. Although we hear now that it's being eased, gradually. So exogenous shocks are there. On the domestic scene, the macroeconomic challenges are there. We have the political transition. This is a plan, 2021 to 2025. That's the capital market plan that we have. And we are already in 2023. 2023 is over. So, and 2023 we know is elections and so on. And there may not be time to give attention to this plan. And that is my fear. Because if you look at the amended governance structure of this plan, the implementation of this plan will rest squarely, on the table of the Minister of Finance. So the political transition is also likely to affect or slow down the implementation, of the plan. And again, it's also important that as long as it is not again mainstreamed into the National Development Plan, it's also going to have experience some challenges. So, in my view, these are some of the challenges we are likely going to have, especially if, as I said, it doesn't receive this, support at the highest, level, from the highest level of government.
All right, Professor. Well, so much to unpack there, and obviously we'll keep tracking the plan to see that they actually, stick to it and achieve, what they want to achieve with the master plan. Thank you so much. That was Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President of the Capital Market Academics Union of Nigeria. Thank you so much for coming on the program.
My pleasure, Ladi. Thanks for having me.
Thank you. All right, now let's bring you some of the things to expect from Nigeria's capital market next week, starting with the central bank, which is set to roll over 54.36 billion naira worth of maturities at the primary market auction on December 7th. The Treasury bill secondary market bearish sentiment is expected to continue amid expected tight system liquidity, with participants seeing shifting focus to the upcoming NTB PMA. For the bonds market, traders maintain an uptick view in bond yields in the medium term as the FGN's 2023 full-year borrowing plan and expected fiscal deficit point towards an elevated supply. At the money market, overnight rates is expected to trend upward from current levels, barring any significant inflow to the financial system, coupled with expected outflows from NTB, the OMO, and the FX auctions. And for the equities markets, traders expect the bulls to dominate activities as positioning by early birds in dividend-paying stocks ahead of the 2022 full-year dividend declarations could outweigh profit-taking activities. And that's it on Capital Market today. Thank you so much for watching. I'm Ladi Williams. Bye for now.